Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is January 5th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla is down $3.30 today. That's 2.9%. Closed at 110.34. Post market, we are down by a further 11 cents. Let's look at what this looks like on the chart. Okay, yeah. So we are weakening a little bit today compared to yesterday. So 2 days ago, we had a significant move down. We had a little bit of a bounce yesterday. And now we seem to be very weak. This is a very slow day. In terms of volume, it's medium, I would say. We came back underneath 111.42. So this 111.42 is not solved yet. We closed above it yesterday and also on the 28th, the 29th, and the 30th. But we are back below it today. Let's look at the 1 hour chart to see if there's not something interesting to see here. The first hour was a gap down but we are maintaining ourselves. Look at how perfectly the bodies of the first two candles are smack on 108.37. Right smack here, and we have the bottom of the third candle right smack on it. So right now we really have support at 108.37. And we are coming back a little bit higher, but could not break 111.42. So we can conclude that really this congestion zone is real. Between 108, we are really in a congestion zone between 108 and 122. The stock does not know what it wants to do. It's just going sideways. We have a smaller congestion zone also between 108 again, but 113.94. We see that we have been staying here, just like we have done here around the 28th of December. Let's go back to the daily chart. So on the daily chart, we see that we are coming quite close to this downward resistance. So the stock is going to have to make a decision in the next, I would say, 5, 6, 7 days, because we are having one candle every day. And at some point, we are going to have to make a decision in terms of what is happening. Are we breaking this downward resistance, or are we caving underneath it? And your guess is as good as mine. What I do here in technical analysis is that I don't try to predict what is going to happen. I just detect the important milestone of what the stock is doing. And a milestone can be a break in resistance, a break in support, and stochastic over 60, a break of stochastic over 60 or under 60 are also a decent milestone. And based on those milestones, then we can act. So right now, there's not much to do right here. As I mentioned, we are still above this double support. I would wait for a break below 108 to consider this a signal to short. In terms of indicators, stochastic at 7, extremely low, no force in the stock. Stochastic can have a value between 0 and 100. If it's at 100, it means that the stock is really going high. It has a lot of momentum. And if it's at 0, then the stock is really dead. It has no upward momentum. Right now, we are at 7. So we are pretty low. There's no momentum yet in the stock. Even if we had this little bit of a move on the 29th and on the 30th, this was a nice move. But in terms of the real momentum behind it, we only got stochastic at 16 for these two moves. This is definitely not an indication of any bull system at all. Even if we break this resistance right here or this second one, if we don't have stochastic over 60, this could just be a sideways move without any more implications. So for a stock to have a decent move, a significant move, we need to have stochastic over 60. Let's look at the move that Snowflake did right here. Let's look at this move and let's look at what stochastic was doing during that move. We see that stochastic was above 60 most of the time. Yes, it does certain little dips, but those dips does not really mean that the stock necessarily goes down. We should not be afraid when we have a dip in stochastic because we need to see if the stock still maintains itself above support. If it maintains itself above support and we are losing stochastic, it's okay. Support is more important. But the point I'm trying to make here is that for a move in the stock market, we need to have a good stochastic. And here, the stock was going down, and look at where the stochastic was. Stochastic was mainly below 60. This is what I am using as a criteria for all of the stocks that that I invest in. And so far, we don't have any indication that Tesla is going anywhere yet. It does not mean that it could go somewhere tomorrow. I don't know what is going to happen tomorrow, and nobody knows what is going to happen tomorrow. But if we see stochastic over 60 tomorrow and a break in resistance, then we will know, okay, it has just happened. Now is the time to get in. This is as simple as that. We don't try to make any predictions because predictions don't work. Predictions don't. Timing a prediction in a market does not work, but spotting a change in trend, this is what works. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.